Eric Mwathe with Mwathe.com. Let's take a look at Pandora, which is down at the open of this week, down about 11%. And this is the daily chart. We can see that the daily is having a big move as the daily RSI moves below RSI 50, which is pretty much common occurrence when a stock is moving below 50, just like when it moved above 50 here in the last couple of days. During this period here, we had a nice spike. So now we are seeing the opposite of that spike with a move lower, RSI moving below 50. On the weekly time frame, if you take a look at all the data for the stock, interestingly here we see three lines coming into play. If you take the previous perfect entry in the stock, which was during this period here, so on hindsight there was a movement in the RSI there, and this entry in the $9 $8 area, we can draw a line from there, something like that, and you can see as of right now the stock is coming back to that level, and we seem to be actually showing double top rejection on that line. So that's the first line showing a rejection. Now keep in mind this line has been instrumental in holding the stock. For example, if you take a look at the period when the stock was bouncing on this line, you get a slight movement higher. Same thing here, slight movement higher. Same thing here, there was a slight movement higher. So right now we are seeing that the green line is becoming a problem for the stock. Now take a look at the next line, which is the line connecting previous lows, coming into play right now. If you take the lows here in let's call it about April of 2012, and the lows of late 2012, connecting the lows of April 2014, extend that line, and you can see pretty much that now we are again seeing another double top on that blue line. Interesting. In fact, if you take a look at the periods when the stock has dropped, you can see that pretty much the movement lower begins when the RSI moves below the blue line. Also here during this period, and recently we've pretty much been staying below the blue line throughout this period here, and now here. In fact, if you take a look at that line again, the most recent high, so take a look at this line here, you'll see that the most recent high in the stock has come as the RSI has hit right here in late 2015. We hit that level there and pull back, and now we are coming back and showing what looks like a double top on that line. Now there's another line, which is a third line, which is actually based on this negative divergence line here. As you can see, the stock made lower lows during that time period while the prices were moving higher. So that was negative divergence. So if you take that same line and extend it, so the same line, extend it lower, you can see again we come back to the same resistance line on the weekly chart, showing that the stock is again hitting that same line with the potential for what looks like now to be double top. You can see there, hit that level and again that level, and also the highs of late 2015 came on this same resistance line. So the three lines right now on the weekly chart show that this is where one can expect the stock to struggle. And so if we draw the other line, so there's a line coming from the lows like that, and a line coming from this perfect entry. Oops, let me draw that again. We can see that all these three lines are a problem for the stock right now. One can expect lower prices until such a time as the stock can clear and move back above those three lines of resistance. Eric Mwathe, Mwathe.com. Good luck, peace, and blessings. ESCS.